Hello fellow investors, and welcome back to your YouTube channel Dollar Dose. Today we have a truly special topic that holds invaluable insights for all the young investors out there. We will be delving into the profound wisdom of the legendary Charlie Munger, Warren Buffett's right-hand man and a sage in the world of finance. We will explore some of the best advice he has to offer for those starting their investment journey. Imagine this, a small investor in the early 1980s, who instead of chasing the latest hot stocks, took Charlie Munger's advice to heart. Fast forward to today, that investor's portfolio might have weathered market storms and grown significantly. That's the power of timeless wisdom, and that's precisely what we will be uncovering in this video. Advice 1. The power of patience. Charlie Munger often emphasizes the importance of patience in investing. He once said, "The big money is not in the buying or selling, but in the waiting." Let's illustrate this with a real-life example. Consider the case of Amazon. In 1997, if you had invested $1,000 in Amazon's IPO and held on to it, that investment would be worth over $1 million today. Munger's advice encourages us to focus on the long-term potential of a company rather than getting caught up in short-term market fluctuations. Advice 2. The circle of competence. Munger's circle of competence is another gem of wisdom. He suggests that investors should stay within their circle of competence, understanding the businesses they invest in. Let's explore this concept further. Take the technology sector, for instance. If you're not well versed in the intricacies of tech companies, it might be wiser to focus on industries or sectors where you have a deeper understanding. Munger argues that investors are better off being a master of a few things rather than a jack of all trades. Advice 3. The importance of continuous learning. Charlie Munger is a voracious reader and a lifelong learner. His advice to young investors includes a strong emphasis on continuous education. Consider Munger's book recommendations, such as Influence by Robert Cialdini. By understanding human psychology, investors can make more informed decisions. Munger's commitment to learning has been a cornerstone of his success, and it's a principle we should all embrace. Advice 4. Invert. Always invert. Munger's idea of inversion involves solving problems by approaching them backward. It's a unique perspective that can be applied to investing. When considering an investment, instead of asking why it will succeed, ask why it might fail. By identifying potential pitfalls, you can make more informed decisions and mitigate risks. Inverting your thinking is a powerful tool that can set you apart in the investing world. Advice 5. Stay rational in an irrational world. Munger's famous for saying, "All I want to know is where I'm going to die, so I'll never go there." This principle is about avoiding obvious mistakes, and it ties into the idea of staying rational in an irrational world. During the dot-com bubble, many investors were swept up in the hype, leading to inflated stock prices. Munger's advice to avoid the madness helped Berkshire Hathaway avoid substantial losses during that period. Staying rational and avoiding herd mentality is crucial for young investors. Advice 6. Be wary of overconfidence. Overconfidence can be a silent killer in investing. Munger advises against being overconfident in your abilities and decisions. Consider the story of Long-Term Capital Management, LTCM. A group of highly intelligent individuals, including Nobel laureates, managed LTCM, yet their overconfidence led to a spectacular failure. Munger's lesson here is clear. Always be aware of your limitations and be humble in your approach. As we wrap up today's exploration of Charlie Munger's best advice for young investors, remember that these principles are not just for the financial world. They're life lessons that can shape your journey towards success. Investing, like life, is a continuous learning process. By embracing patience, staying within your circle of competence, committing to lifelong learning, inverting your thinking, staying rational, and avoiding overconfidence, you'll be better equipped to navigate the complex and ever-changing world of investing. So, young investors, take heed of Charlie Munger's timeless wisdom. As you embark on your investment journey, remember that success often lies not in the complexity of strategies, but in the simplicity of timeless principles. Thank you for joining us today. If you found this video valuable, don't forget to like, share, and subscribe. Until next time, happy investing.